What if I told you that while everyone's chasing the next Tesla or Apple, some of the most explosive opportunities in the market right now are trading for less than the price of your morning coffee? I'm William, and welcome back to the channel where we cut through the noise and bring you actionable investment insights backed by real research and fundamental analysis. Today, we're diving deep into 5 penny stocks that serious investors need to have on their radar right now. And I'm not talking about random picks here. I've spent hours analyzing SEC filings, quarterly reports, partnership announcements, and balance sheets to identify companies with genuine catalysts that could drive significant returns. But before we jump in, let me be crystal clear about something. Penny stocks are volatile, they're risky. And yes, you can lose money fast. However, for those who understand fundamentals and can spot catalysts before the crowd does, these stocks represent opportunities that blue-chip stocks simply cannot match anymore. So if you're someone who's willing to do the homework, who understands position sizing and risk management, then stick with me because what I'm about to share could change the way you think about portfolio allocation. Now, before we get into specific companies, let's talk about what makes a penny stock worth buying in today's market environment. We're in a unique situation where institutional money is finally starting to pay attention to overlooked sectors where technological breakthroughs are happening in spaces most investors have completely ignored and where certain industries are about to experience massive tailwinds that could send share prices soaring. The companies I've researched aren't just random lottery tickets. Each one has specific catalysts coming up, whether that's FDA approvals, infrastructure deals, institutional adoption, or breakthrough partnerships that could serve as major inflection points. What I've done is identify companies operating in high-growth sectors like biotechnology with breakthrough Alzheimer's treatments, cryptocurrency mining operations expanding at unprecedented rates, renewable energy storage solutions solving critical problems, telecommunications infrastructure powering our digital economy, and precious metals mining with assets that could explode in value. Each of these sectors has massive growth potential, and the companies we're covering today are positioned to capture that growth. So let's get into the analysis, starting with our first company. Our first pick is Cognition Therapeutics, ticker CGTX, and this company is making serious waves in one of the most challenging and potentially lucrative sectors in healthcare: Alzheimer's disease treatment. Cognition Therapeutics is a clinical stage biopharmaceutical company developing CT1812, their lead drug candidate for treating Alzheimer's and other neurodegenerative disorders. The market opportunity here is absolutely massive since Alzheimer's affects millions worldwide, and there are very few effective treatments available. What makes CT1812 different is its novel mechanism of action. It's designed to displace toxic oligomers from the sigma-2 receptor, potentially preventing the downstream toxic effects that lead to cognitive impairment. The company has been conducting phase 2 clinical trials, and their SHIMMER study evaluating CT1812 in patients with mild to moderate Alzheimer's has shown promising biomarker data, indicating target engagement and potential disease modification. They're also exploring the drug for dementia with Lewy bodies, which significantly expands their addressable market. From a financial standpoint, their latest reports show approximately $15 million in cash, providing runway into the second half of 2025. They've established important collaborations with leading academic institutions focused on Alzheimer's research. The upcoming catalysts include additional clinical trial data readouts, potential FDA interactions, and new partnerships that could provide validation and funding. The risks are substantial since clinical trials can fail and FDA approval is uncertain. But for investors who understand biotech risk-reward profiles, CGTX represents a compelling asymmetric opportunity where clinical success could lead to exponential returns. Moving to our second company, Bitfarms, ticker BITF, operating in the red-hot cryptocurrency mining sector. Bitfarms is one of the leading Bitcoin mining companies in North America, aggressively expanding operations and positioning for long-term success. They operate multiple mining facilities across North America, with significant presence in Canada and expanding footprint in the United States and South America. What's impressive is their focus on renewable and low-cost energy sources, giving them a competitive advantage where electricity costs can make or break profitability. In their recent quarterly earnings, Bitfarms reported mining approximately 1,000 bitcoins with operational hash rate climbing steadily to around 12 exahashes per second. making them one of the larger publicly traded mining operations. They strategically manage their Bitcoin treasury, holding over 600 Bitcoins valued at tens of millions while selling portions to fund operations. Their revenue exceeded $40 million in the most recent quarter, with adjusted EBITDA showing significant improvement. What really sets them apart is their expansion strategy, including major facility build-outs in Argentina taking advantage of extremely low electricity costs and new power contracts in the United States. They've placed orders for tens of thousands of next-generation miners to be delivered over coming quarters, substantially increasing mining capacity. They're also exploring innovative revenue opportunities beyond Bitcoin mining, including infrastructure services and potential AI computing applications. The risks are clear since their fortunes tie heavily to Bitcoin's volatile price, but at current Bitcoin prices above $60,000, operations are highly profitable. With aggressive expansion plans, improving efficiency, strategic power contracts, and strong Bitcoin treasury, Bitfarms represents one of the most compelling ways to gain leverage cryptocurrency exposure through traditional equity markets. Our third pick is Expion 360, ticker XPON, pioneering lithium iron phosphate battery technology for explosive growth markets. Expion 360 manufactures premium lithium batteries, power electronics, and battery management systems primarily for recreational vehicles, marine applications, and increasingly for off-grid and backup power solutions. Their lithium iron phosphate technology offers significant advantages over traditional lead-acid batteries, including lighter weight, higher efficiency, longer lifespans, faster charging, and virtually no maintenance. As the RV industry and marine sector increasingly electrify, Expion 360 sits at the intersection of multiple growth trends. They sell directly to consumers and, increasingly through OEM partnerships, where their battery systems are integrated into new RVs and boats during manufacturing. Recent financial disclosures show impressive sequential quarterly revenue increases, with year-over-year growth exceeding 50%. Their gross margins above 40% are exceptional for a hardware company, indicating strong unit economics and a clear path to profitability. They've expanded manufacturing capacity in Texas and invested heavily in research and development. The most exciting development is their growing OEM partnerships, with several RV manufacturers integrating their systems as standard or optional equipment, transforming them from aftermarket supplier to embedded OEM supplier with predictable, scalable revenue. They're also expanding into marine markets and backup power applications. The addressable markets are massive, with low lithium battery penetration rates meaning enormous runway for growth. Their competitive advantages include proprietary battery management system technology, established brand reputation, growing OEM relationships creating barriers to entry, and domestic manufacturing providing supply chain resilience. Company number for is Ribbon Communications, ticker RBBN. Operating in telecommunications infrastructure. Ribbon provides software and hardware solutions enabling service providers and enterprises to build modern communications networks. Their products include session border controllers for securing real-time communications, cloud-native software for next-generation networks, and optical networking solutions. They are essentially selling picks and shovels in the massive infrastructure build-out as carriers deploy 5G and modernize networks. They serve major telecommunications carriers worldwide and cloud communications providers. Recent quarterly earnings showed revenues around $200 million, with improving gross margins through product mix optimization and reduced operating expenses, expanding operating margins. What stands out is their positive free cash flow generation, allowing them to pay down debt while investing in research and development. They've won significant contracts with Tier 1 carriers for 5G core network solutions and expansions with cloud communications providers, representing multi-year revenue streams. The compelling investment thesis centers on valuation, trading at what many analysts consider significant discount to networking equipment peers, and intrinsic value based on cash flow generation. For a company generating hundreds of millions in revenue with positive free cash flow and improving margins, the current market cap appears disconnected from fundamentals, creating a value opportunity. Finally, Gold Resource Corporation, ticker GORO, a gold and silver mining company with producing assets in Mexico. They operate the Don David Gold Mine, producing both gold and silver with over a decade of successful production experience. Gold miners are attractive now given strong gold prices driven by macroeconomic uncertainty, central bank buying, and inflation concerns. Latest quarterly results showed production of approximately 10,000 gold equivalent ounces with all-in sustaining costs allowing profitability, current gold prices. They generate positive operating cash flow funding exploration, maintenance, and strengthening their financial position. The exciting aspect is exploration potential with extensive drilling identifying extensions to known mineralization and new targets. Successful exploration adding to reserves could significantly increase company value. They've reported encouraging drill results indicating potential for meaningful reserve additions. Management focuses on operational excellence, cost control, and maximizing asset value while investing in growth. Catalysts include continued strong gold prices directly impacting profitability, successful exploration results, operational improvements reducing costs, and potential mine life extensions. The company provides direct leverage to gold prices with added value creation potential through exploration success. Now let me quickly walk you through this infographic summarizing everything we've covered today. We have 5 distinct opportunities across different sectors. Cognition therapeutics in biotech with Alzheimer's breakthrough potential and phase 2 clinical trials showing promise. DIT farms in crypto mining with 12 exahashes per second capacity and aggressive expansion into low-cost energy regions. Expand 360 in energy storage with over 50% revenue growth and expanding OEM partnerships in the RV and marine markets. Ribbon Communications in telecom infrastructure generating $200 million quarterly revenue with improving free cash flow at 5G deployment tailwinds. Finally, Gold Resource Corporation in precious metals with 10,000 gold equivalent ounces quarterly production and strong exploration upside. My recommendation is to approach these with disciplined position sizing, never investing more than you can afford to lose. Diversify across these picks rather than going all in on one. Monitor quarterly reports closely and set clear exit strategies. Remember, penny stocks require active management, not buy-and-forget approaches. These 5 companies represent diverse opportunities for investors willing to do homework and understand risks involved. They require active monitoring, disciplined position sizing, and clear understanding of your risk tolerance. As always, do your own due diligence, read the financial statements, understand the business models, and invest responsibly. 5 penny stocks across diverse sectors. Biotech Alzheimer's breakthrough, Bitcoin mining expansion, lithium battery growth, 5G infrastructure value, and gold mining leverage. Disciplined sizing and active monitoring essential for success. If this analysis has been valuable, hit that subscribe button and turn on notifications so you never miss our research. I'm William, and I'll see you in the next one.